Hi everyone, and welcome to this week's live stream from Exness. I'm Michael Stark, Financial Content Leader at Exness, and in this stream I'm going to be explaining a little bit about my personal opinions on recent fundamentals and news, what's coming up next within the next few days, most importantly of course this week the Fed's meeting, and we're going to be looking at some charts, and I'm also going to be answering any questions that you have that are related to this topic. So before we start, a little bit about me. I'm Michael Stark, I'm Financial Content Leader at Exness. I've been working for Exness since 2018. I've been trading in general CFDs since 2013 and early 2014, and I am an associate of the Society of Technical Analysts since 2019. And I would just remind you at the beginning that trading is risky. It is possible to lose money trading, of course. Please remember that any financial decision or trading related decision that you take is at your own risk, And what I'm saying here is not the opinion of Exness, or obviously not the opinion of YouTube. It's my personal opinion and my personal inclination. So it's not a recommendation to trade, it's not a signal, it's not a guarantee of success. You should not blindly copy what I do, please. And I would encourage you, if you have any questions at any point during the stream, that'd be great. Please ask a question. That makes it more interactive, that makes it more fun for me, and I think hopefully it also makes it more fun for you if you can ask a question. And that way you can also find out something that I might not cover otherwise, especially if it's going to be a minor forex pair, or possibly even an exotic pair if you want to look at. I can certainly have some kind of input on that, if not necessarily giving you a specialist perspective on some particular exotic pairs, which are not very common. So first, I'd welcome you all to the stream, to all the people who are watching us. So we've got Alua Pizzi says hi, Mr. Alua. Hawili says hi, hello back. Mr. Abdurrahman says hello, Mr. Abdurrahman. And we have Dog S6T says is watching from South Africa. Welcome. Thanks very much for joining us. And anybody else who is joining, it'd be great, or who's already here. You let us know where you're joining from, and if you have any questions, please by all means drop them in the live chat on the stream, and we should be able to answer them at some point, certainly during the discussion. Possibly at the end, or possibly in the middle, especially if there's something that you want more detail about, or if there's something that maybe you don't fully understand, or for that matter, certainly if there's a particular instrument you want to look at and I could give my 2 cents on it. Remember, just my opinion. So firstly, we're going to begin by looking a bit at the client area from Exness. So here I'm signed into my personal area with Exness, and I would just remind you at this stage that this is a demo account, and all of the technical analysis that we're going to be doing throughout the stream is done on a demo account. It's not being done on a live account. Please remember that if there is any activity, any ideas or opinions that I express here are my own. They are not recommendations for you to trade. So if we go into the personal area from Exness, we can see this tab on the left, Analytics, and we have under that 3 tabs. Analyst views, which is where we can get some ideas for trading from Trading Central. And if we click on one of these, let's take this one for an example, then it gives us a basic idea towards buying. In that situation, remember, it's not a recommendation, it's just an idea towards buying based on the technicals as Trading Central sees it. And there's also the alternative scenario for if somebody was selling, where are some of the possible targets that you could perhaps set. So that's something that you can use within Analyst Views. And the other tab that we have here is Market News, which gives you a live stream of all of the most important recent events, and some of the less important ones as well, that are affecting primarily Forex pairs. But also there's going to be some discussion of trade recently, of course, and there's going to be some discussion about commodities such as gold and oil. And from here we can also get access to the economic calendar, which you can find on Exness's main website. Exness's economic calendar is a potentially useful tool to understand when are some of the primary events coming out that are likely to have some effect on markets. And we can filter this by currency. Most of the major currencies and some minor ones are also represented here in the economic calendar. But for today, the main economic calendar that we're going to be using is the calendar from Trading Economics, because we're wanting to go into this in a little bit more detail. We want to look in somewhat more detail than we might on Exness's economic calendar as to the context of the releases, that is what's happened previously, how does it fit in by comparison with the other releases that we're looking at, and also what's coming ahead, what is the possible consensus, and also what's the range between the overall consensus of analysts for a particular release, and what does Trading Economics' forecast expect. That gives us some indication as to the degree of volatility that we're looking at or that we're possibly expecting for any particular economic release. So Ephantus Matugi says, watching from Matugi, Kenya, welcome. Joyce Gitau says, hello Michael, streaming from Nairobi, Kenya. Welcome back, Joyce, nice to see you again. And Alua Pizzi, Mr. Alua says, what's your take on US oil, pound, Aussie dollar, and cable? Yes, we will certainly look at all of these. Maybe pound against Aussie dollar, weren't planning on looking at it, but we can definitely look at it. So what I would say, please, Mr. Alua, is if you can hold on for a few minutes, just going to look at some fundamentals first, some of the overall fundamentals, and then we'll start to look at the charts that you've requested. And thanks very much for the question, Mr. Alua. So firstly, let's look at overall what's going on. Recently, we have had somewhat greater focus, I think we could say, on monetary policy and increasing expectations that the Fed is going to call for another 2 cuts, pretty much certain it's going to call for another 2 cuts for the rest of the year. And we're also generally looking at the American government shutdown. So that's something we could just briefly look at now. One of the reasons that the government shutdown in the USA has been something that's quite detrimental in most respects to markets is that we don't have that much reliable data. We did have inflation from the USA, which I'll talk about in just 1 minute, but we have had quite considerable delay in terms of various figures from the USA, notably the NFP. So let's look back very briefly at inflation, because last Friday we had the delayed release of American inflation, and that came in slightly lower than the consensus. The consensus for the annual headline figure had been 3.1%, but it came in at only 3%, slightly lower than the consensus, which in itself is not that much of a difference, of course, 0.1%, but it's something that can have a possibly significant positive effect on sentiment, in that you would usually not expect the Fed, or any other central bank for that matter, to be cutting rates when we have a situation of inflation pretty consistently rising. And yet that is what is expected to happen. The Fed is expected to cut rates twice more in the rest of the year, even though inflation remains quite significantly above the old target. Old target for inflation was 2%, and now we've got inflation at 3% for the annual headline figure. And yet, if we're moving now to CME FedWatch, we can see that by the end of the year, there's an overwhelming consensus there's going to be 2 more cuts. 98% approximately, like absolutely certain, as for the moment at least, the participants that we're going to be having the 2 more cuts by the end of the year. And if we're looking specifically at the meeting that's happening tomorrow, we've got again almost complete certainty that we're going to get a single cut, taking the rate to 3.75 to 4%. And that's important, I think, partially because, and I would stress this is just my opinion, it's not anybody else's opinion or a law or a fact or anything. It's quite possible that traders are realising these data are less reliable. Quite possibly we might see some kind of change in the direction of inflation, not least because we've had quite significantly worse job reports from the USA over the last several months, and also because the government has been shut down, so these releases are delayed. So that's why I would point to, apart from the Fed, which we'll talk about in just a second, that's why I would point to upcoming next week. Some of the most important releases we're really, really eager to get is the double NFP. It's been quite a number of years since we've had a double NFP, but since we didn't have any NFP due to the government shutdown this month, then this month's NFP is delayed to the same time, provisionally at least the same time as the NFP for October, which is coming out in November. So that's going to be quite big. That's a big release that I certainly want to monitor, and I'm sure Andreas will be talking a little bit more about that next week in his live stream, which will be at the same time. So we have Joy Wick FX watching from Nigeria. Welcome on board. Judah Monsink, hello. Gold dollar intraday analysis. Yep, we can certainly do that. We can certainly look at that. And let's start with Mr. Alua. So Mr. Alua has asked about oil, pound, Aussie dollar, and cable. I will start with that, and then we'll come back and we'll talk a little bit more about the Fed. So here we are on Exness's web platform, and I would just remind everybody watching, and especially Mr. Alua who asked the question, thank you for the question, that this is a demo account and this is just my opinion. I'm not recommending you to trade anything, and I'm also not recommending that you should believe me. You need to do your own research. This can be a starting point, but it's not recommended by any means that you should just follow what I'm saying here. So if we look at the chart of US oil, probably one of the main factors that we've been monitoring recently, where am I going to go to get more data about that? That's a very good question. Let's come back to that in a minute. But basically, the summary is one of the most important factors last week that drove oil up from these significant new lows was the information that the USA was sanctioning, causing new sanctions on major Russian oil companies, namely Lukoil and Rosneft. Rosneft, the direct effect of the sanctions is not really that important, but the direct effect for Lukoil is quite significant because, of course, Lukoil, for some reason, operates a fairly extensive network of petrol stations in the USA. So that has a direct effect to some degree on the price of oil and on the availability of oil in the USA, which was one of the main consumers. And also it's the indirect effect, the threats of secondary sanctions on banks and any other kind of financial services which are expediting the transactions between these two companies, Lukoil and Rosneft, and major buyers. I'm thinking primarily of China and India here, but also other slightly less important buyers such as Turkey. So that could significantly disrupt the supply of oil to these countries, which are very large consumers, and it might increase the pressure on countries in the Gulf to pump more or to supply more to these countries and so supply less elsewhere. There hasn't really been much follow through after that. We've heard some headlines. As for whether anything will come of them is another question. We have heard some headlines from energy ministers from OPEC in the last few days, particularly from Kuwait. I believe it was maybe it was yesterday. Energy Minister of Kuwait says that more can be pumped to meet any possible shortfall in supply. Whether that will actually happen, whether OPEC is happy with prices at this level or wants to drive them higher, these are all speculative questions. We can look, I think, certainly at the technicals. So part of the reason why I personally would think, and I would stress it's just my opinion, that the price is probably not immediately going to continue higher, as we can see here that there's been a test on the 26th. There's been a test of the 50 simple moving average from Bollinger Bands, right? And we can see that the price after that has fairly strongly moved back down. So we can consider that certainly for now an unsuccessful test of that moving average. And there is also the question whether it's going to move back below the 20 SMA. So I think one possible scenario, just based purely on that, is some degree of a channel or in the value area becoming important between these two moving averages, the 20 and the 50 SMAs. That's in the absence, of course, of any significant new fundamental information. Because right now we can see that while the price is not quite within overbought based on the slow stochastic, it's very, very close to there. The bane line of the slow stochastic is very close to overbought. So we have the potential for overbought conditions, which oil usually does care about to some degree, and fairly strong reaction downward from the test of the 50 SMA. So that's why I would think in the short term at least, it's fairly likely that it's going to move back to the 20 SMA. Whether it's actually going to go back all the way down to the recent lows just below $57, I think is kind of questionable. It's something that I would want to monitor, and probably some of the main things, at least in the short term, that I would be looking at would be the regular stocks. So we usually have two regular releases of stocks. We have the API stocks from the USA firstly on Tuesday, which is coming out late-ish tonight, GMT. And then we also have the EIA stocks, which comes out on Wednesday. So I would just stress these aren't usually super important releases that generate any kind of long-term trend, but they can give us some kind of indication as to what's going to happen. So my opinion on this is I would probably, if for the very short term, I would consider selling. Just might be a little bit difficult on this particular time frame on the daily chart to find a reasonably good ratio of risk to reward. And further ahead, I would try to monitor the data, try to monitor any further comments from senior members of OPEC. But overall trade is not something that's particularly in focus. It's due to be that Donald Trump will be meeting Xi Jinping on Friday in South Korea on the sidelines of the Asian Economic Forum. Whether there's going to be any confirmed deal or significant de-escalation from that, it depends really on what they discuss and what the sentiment is on the comments afterwards, but it's not something that we're necessarily looking at very closely right now. Most people expect at least that there will not be a significant escalation. So also requested by Mr. Allure, let's look at pound Aussie dollar. So this is one pair where I think the situation is maybe a bit less clear than various other forex pairs at the moment, in that it depends, I think, quite a lot on British politics, and it also depends, I think, on monetary policy. And if we just take it from a fairly simplistic point of view, we just look more or less purely at interest rates, then I think for the short term at least, then we expect that the pound is probably going to be making some gains. Since the Reserve Bank of Australia's moved to cut rates several times over the last few months, and okay, it's not very likely that they're going to be cutting at the beginning of November, but it's certainly possible since the Reserve Bank of New Zealand has delivered a couple of surprises, and the RBA has also delivered some surprises this year, although more in the opposite direction, more like a cut had been expected and wasn't actually delivered. Whereas we look at the overall kind of economic fundamentals just at a very high level here, I would stress, then it's not going exactly fantastic in neither of the countries. I mean, GDP growth in Australia is okay, it's just not exactly fantastic by any means. And overall, I think it broadly seems to be that the job market in Australia is kind of similar to the UK, whereas Australia's job market is probably worsening more quickly. That's just kind of an initial impression based on the most recent job report that we have, which is from just a bit less than 2 weeks ago. But that's something I think we want to continue monitoring the data to see, right? So overall, I don't think there's a very clear signal from fundamentals. From a very simplistic perspective, possibly we might expect that the fundamentals slightly favour the pound, but this certainly, I think, depends on the autumn statement from the British government, which is coming up pretty soon, and generally sentiment on that is quite negative. Most traders, or let's say very many traders, expecting that that's going to be somewhat negative. So that's why I personally think that it would be more likely, combined with the fundamentals as well, and the technicals, I think it would be more likely that the price is probably going to move up. Because while we don't have a very obvious, or at least we don't have a very specific area of support, bearing in mind the weekly chart is quite a high time frame, to have a very specific area of support, I would say it's probably somewhere within this area where we have several tests and no actual breakthrough, somewhere around 203 to 204. We might see the price moving up, and I think possibly the initial possible target for me, I would stress just my opinion, might be within the value area between the 50 and 100 simple moving averages. So that's around 205 approximately. I just think the kind of question here for me would be, how am I going to get a reasonably good ratio here? Because if, let's say I want to go for 205, right? Somewhere in the lower part of the value area between the two, then I think the logical place probably for the stop would be around 202.5, give or take. 202.5. So that's actually reasonably good ratio. If I was to do it this way, it's reasonably good ratio. It's just maybe a little bit too close. The stop here is perhaps a little bit too close to the latest low. So it's not really giving us a lot of room to move. One option perhaps would be, although maybe this is riskier, it's debatable, one possible option would be to use a buy limit to, let's just set that first. Remember, this is not a recommendation, this is just my opinion, and this is a demo count. One option would be to set a buy limit a little bit lower. So let's say if we want to set where I put the stop for the previous market order, set the open around 202.5, and then I think I would probably set the initial target around the same place. Maybe we could be a little bit more aggressive with that, so 205.3, give or take. And then the question is, of course, where do you put the stop? 202, 201? Let's go with 202. And then, of course, we have an even better ratio. It's quite a good ratio. And I think it also has the advantage that if in some possible situation, if the price suddenly bounces, or if the price just doesn't do anything for a while, then of course we don't have a trade in the first place. The possible issue with that is it might not reach that low. It might just bounce fairly aggressively from the area around 202.7 to 2.8 ish, since we've seen quite an aggressive move up from there on the 10th of October. So that's kind of a question. I think that's like an open question. And finally, cable. Let's just look briefly at cable as requested by Mr. Olua, and then we'll move back to fundamentals, talk about the Fed. It seems to be in a pretty clear downtrend. I just think it's questionable to what extent, and it's going to move immediately lower. But then that comes with the obvious caveat: we have the Fed coming up this week. So if in the press conference there's some perception that the Fed is less dovish or more hawkish in some sense, more confident, more sure that there's not going to be significant economic challenges or anything, which is still quite unlikely. But if that does happen, we might see the price extending further down. And I think probably we're looking at the area around 132.7 to around 133 for the main support. So my inclination for this, as with I think probably most other instruments with the dollar in them, would be just wait until after the Fed's meeting, which is on Wednesday. Just wait until after that and then take it from there. If I was determined to trade now, I think my inclination would probably be for a short-term buy, just based on the idea that it doesn't seem too likely to continue below here when we've got upcoming important releases, but no very important releases right now, and that's a fairly round number, around 133. But I don't think I would try to force a trade in that situation. It's just not really very clear in many respects what it's going to do. And yes, we're about to get this death cross of the 20 SMA below the 200. It's just kind of questionable, I think, to what extent that's a very useful signal in the short term. It's a very lagging signal. Not quite as bad as some of the other moving averages, but it's really quite a lagging signal. So my inclination here would be to just wait and let's see what happens around the Fed's meeting. Let's see how it reacts. If there's an extension below, we could possibly join that, whereas if there's a bounce, possibly also join that as well. Depends on the Fed's press conference, and it depends on the market's reaction to that. So I know that's not exactly the fantastic, clear answer that you might want, Mr. Olua, but that's just my opinion on it, right? And let's just briefly come back to the Fed. We want to talk about the Fed a little bit, and then we will answer some more questions. We also have questions from Judah Monsing, and we also have a request for Dog S6T. We'll look at those shortly. These are major symbols we're going to be looking at anyway. Just wanted to look briefly discuss about the Fed. So we've got the Fed coming up on let me just go back to this week. We've got the Fed coming up soon, which is tomorrow actually, and it seems to be pretty much guaranteed that they're going to call for a single cut. Now, pretty much certain. So there's not really that much intrigue with the decision. There isn't usually that much intrigue with the decision, but we're looking primarily at the press conference to see is there any specific change in the statement? Is there any references to inflation or to jobs or anything like that have been added or removed or changed? And also we want to see in the initial spoken statement from Jerome Powell before the press conference, how has that changed from the overall tone of the previous ones? What kind of questions are being asked? How confident does he seem about the economy? To what extent does he think it's a problem that there's this delay in the job data? But I expect probably we're going to get some overall theme of let's wait and see and let's watch the data, since that seems to be pretty much recurring theme recently. So I also want to look briefly at GDP. So if we've got on Thursday, it's currently scheduled for Thursday. Whether the shutdown will affect that, we don't know for certain yet whether the government shutdown will affect that. But the GDP growth, for the third quarter is expected on Thursday, and currently that's expected to drop to 3%. So if that does actually happen, then I'm not sure it's something that's necessarily very negative, because if we look back to what happened last quarter, it was consistently revised up from the advance figure to the final figure. It was twice revised up, and it was revised up quite a lot by 0.8%, which is pretty rare. That's not very common. So that in itself, I think, has kind of boosted sentiment somewhat on GDP, and I think we should all, and many traders will be, realistic about whether it's possible to sustain that level of growth given the overall conditions in terms of new tariffs and in terms of just how high relative to the historical norm over the last 20 years or so, how high rates are. Remain quite restrictive, even though the Fed has made some cuts. So let's see how that plans out. And I think this might be quite an important release, just because there is some degree of intrigue as to how job data is going to play into that. Because if we bring up non-farm payrolls, as we've been mentioning obviously a few times, just going to briefly go over this, not too much detail, we had very big downward revision for a couple of months for the NFP for May and for June, and significantly worse releases compared to the overall average in the earlier part of the year and late last year. So that's likely to have, I think anyway, that's likely to have quite a significant impact on GDP. So that's a really critical release as well, coming up this week, GDP on Thursday. So, I mean, generally, there might be some exceptions for scalpers, of course, but for most traders, it's usually standard practice when you have these big releases coming up, the Fed and advanced GDP, to wait out, just to plan for different situations, but not actually to enter any very significant trades around now, because we have this data coming up that might significantly affect the overall outlook and the impression that we have about economic growth or about various other things. And other significant things that we want to be watching this week, I think, are Bank of Canada's decision, which is also happening on Wednesday, a little bit before the Fed, so we can probably expect dollar loonie to be quite active around that time. And Bank of Canada is also pretty much certain to be calling for a cut to rates, so that would take it to only a little bit more than half the Fed's rate, if that's accurate. So that's something that probably is going to influence trading for and volatility for dollar loonie. And if we look also at the Bank of Japan's decision, we had, or I had, various other traders had been expecting another hike by the Bank of Japan at some point this year. And that playbook is pretty familiar from the Fed. It's been pushed back pretty consistently. Initially, we're thinking possibly June, low probability of that, but possibly. And then possibly more likely to July, no. Possibly more likely August, possibly more likely September, but no, has not happened yet. And I think we maybe face the possibility that it won't. There might not be another hike by the Bank of Japan this year, given the overall conditions. Since if we look at the situation for inflation in Japan, certainly looks like it's peaked. Looked like it actually peaked at the beginning of the year, and while it has risen in September, that's true. Just one somewhat divergent release is not necessarily something that is going to really give us much confidence in expecting a central bank to behave in a certain way. Something to watch out for. It's just not necessarily, I think, something to actually trade based on. And also this week we want to be looking ahead to the ECB's meeting, and that's one which, like the Bank of Japan, seems to be very, very unlikely that they're going to call for any change. And it seems like, or the general perception anyway in markets is that the tone of the press conferences in the last couple of meetings of the ECB suggests that the current cycle of loosening is over, or at least it's going to be paused. And we've got flash GDP or advanced GDP from various European countries, so that's something that's possibly important. It's just not necessarily up there with the very top most important releases, and flash inflation, of course, as well from the Eurozone and from various European countries. So it's a pretty big week of data. Probably the only really major currency that doesn't have any significant amount of data coming out would be Britain. I don't have any very important data really coming out from Britain. Lending data somewhat important tomorrow, but it's not something that we really put a particular focus on. Looking ahead to the Bank of England's next meeting for the pound as one of the next very significant fundamental factors. And for stock markets, I think we want to look just very briefly at earnings, and we can come back to that later. Overall, and I would stress this is just kind of a high level summary here, so I want USA primarily here. Overall, we've had moderately positive earnings from the banks. Usually the major banks are the first ones to release. So we've had fairly positive earnings, just purely in terms of EPS, from the major banks. And in general, we've had pretty strong other earnings as well. And I'm looking primarily at Netflix here. It's fairly significantly beaten the previous. It just hasn't done very well, of course, compared to the consensus. Whereas Tesla has done better than the consensus, just not as well as the previous. And Tesla, as of course we've been discussing a few times, has various issues with different things at the moment. So it's not necessarily such a super positive such a super positive share. So looking ahead this week to some really critical earnings from Visa today, which is after hours, and Microsoft, Meta, and Alphabet. Really important releases, some of the most important tech companies, which are releasing their earnings tomorrow. And all expected to be at least slightly lower EPS, which is kind of normal situation for the third quarter seasonally, but still something that we want to be watching. And Boeing, that was a particularly bad result previously, but Boeing, it's not something really in our focus as traders of CFDs because it's facing some quite considerable challenges. And then on Thursday, looking ahead to Apple and Amazon. So very big week in terms of tech earnings. That's something that we want to be monitoring. And also I think it's important, although it might get kind of forgotten in among the tech earnings, ExxonMobil releasing on Friday. That is actually pretty important given the movements of oil recently, and given the overall performance by the energy sector recently. That's something that we do want to be looking out for. But we want to be seeing how these earnings are doing this week before I think making any kind of long-term positions for indices. So let's look at the questions before moving on to anything else. Let's look at the questions from Judah Monsink. Gold intraday. Well, I think we will look at gold intraday, but I think also let's try to look at gold over the relatively longer term, and that will kind of inform our intraday perspective on gold. In the overall, we have this huge uptrend, right? We've had this huge uptrend lasting for a very long time. One of the best bull runs on gold for many years, definitely. And for the moment, at least, seems to have paused. Since the lower rates by the Fed for the rest of the year and early next year seem to be pretty conclusively priced in. And I think sentiment generally seems to be fairly positive on there being some kind of not necessarily firm agreement where everybody's happy in trade between the USA and China, but at least not an escalation. Not any significant escalation seems very likely in the trade war. And I think one important factor as well is just profit taking. If somebody's been in a trend like this, especially for a CFD trader, it's lasted about 2 months, it's just gone zoom like about $1,000. Then, well, maybe you might want to be taking some profit. Seems to be pretty normal to do that. And I had been expecting, disclaimer here, I had been expecting that we would get some kind of reaction around 4,050, which is 161.8% Fibonacci extension. I'd been expecting we get some kind of reaction and we would bounce from there possibly. That has not happened, and actually it's accelerated lower. There's been more momentum lower. And it hasn't really stopped for any length of time anyway, around 4,000. So that's why my assumption is for the moment, certainly the bears are more or less in control and they can do what they want for now. As for what is our long-term static support, I don't know. Great question. Doesn't seem to be, there's no evidence, let's say at least, that it's about 3,800, because we didn't really see much of a pause there on the way up. Of course, situation different, but still didn't see much of a pause there on the way up. And 100% Fibonacci retracement is, of course, a lot lower. If you're a new seller now and you're selling from this area on this chart, just looking at that that really long uptrend, I think you're going to be really a bit too aggressive to set your target as a seller like below 3,500. It's like about $400 away. It's a bit too much, really. So I think it might be important to see how it interacts with the 50 SMA from bands. It's quite an important dynamic resistance. Potentially, it could be an important dynamic resistance. One to watch and see how that's doing. So I would probably be avoiding any kind of long-term trades here. Whereas if we look intraday, I just think the question is, how is it interacting currently with 3,900? And again, I would stress, like, I often get these things wrong, so that's one of the reasons I probably wouldn't trade intraday in this situation. Personally, I'm not saying you can. I'm just saying I personally would not trade gold intraday in this situation. You might get more continuation lower, sure. You might get more continuation below 3,900, but I would also, just with the mindset, with the mentality of a longer term trader, and looking at the chart, the daily chart, looking at the strength of the trend, well, I'm going to expect this is quite possibly going to bounce. Various people are going to be thinking to themselves, oh, we can squeeze a bit more out here. Maybe it's going to go back to the all-time high. So I certainly would not enter to sell now around 3,900. This is one situation, I think, potentially where you could use a sell stop reasonably far below 3,900 to exploit any further potential movement downward intraday or, kind of short-term swing, possibly. But I just think it would be a big risk to do that based on just the amount of selling saturation that we have here. It's really very saturated in terms of selling on most of the time frames below daily. And in that situation, you're usually expecting, well, sooner or later it's going to need to bounce. It's going to need to pause for breath for a little while. So, I mean, if I was to trade this intraday, which I would prefer not to, I would probably be more inclined towards buying. Or if I really had to sell, I would probably be using a pending order. I probably wouldn't be using a market order. So I think really, and thanks for the question, Judah Mosenk, we would usually look at gold anyway, but thank you for asking for it specifically. Just within the context of these really, really important releases from the USA, primarily the Fed's meeting and GDP on Thursday, it's just I would prefer just to wait and then let's see what's happening with these releases, assuming GDP goes ahead despite the government shutdown. Let's see what happens there and then let's take it from there, rather than trade intraday right now. So I know obviously that's maybe not the fantastic answer that you were wanting to get, but that's just my opinion on the matter. I'm sure there's various other legitimate opinions out there. And thanks very much for the question, Judah Monsink. Dog S6T asks for Eurodollar. Let's look at Eurodollar. Yes. So I think in many respects it's kind of a similar situation to cable. We just maybe have less of an impact from monetary policy here, in the sense that the ECB is seems to finish for now its cycle of loosening policy. And the Fed is still going, so this gap is going to be shrinking. Whereas one of the key differences with cable is the gap very, very likely is going to continue growing. Or the gap is going to be established, is what I mean, in favour of the pound within the rest of the year. So that's one possibility, I think, that maybe suggests that Eurodollar could move higher, since it seems to be priced in more or less that rates are currently higher in the USA, likely to come down. But overall, just given the general lack of volatility recently and lack of clear direction, which is a normal situation for a forex pair, it's not really all that interesting to me. I would probably wait to have some kind of big catalyst, which would probably come later in the week. Because as we were saying earlier, we've got quite a number of really important releases and moderately important releases. In terms of GDP on Thursday, ECB's meeting, of course, on Thursday, the Fed on Wednesday, and then on Friday we've got inflation releases from the EU, and these are all really important releases, at least to some degree. The European inflation flash and European flash GDP, not super important, but specifically for Eurodollar, they can have some significant impact. So wait to see what's happening there. I think that's part of the reason that we have relatively low activity here. But broadly, if I was needing to trade this for some reason, I would probably be more inclined towards buying in the short term than selling. Stochastic's pretty close to neutral, and overall we have had it's highly debatable whether you would call this a downtrend here. I personally would probably not, since we can't really count that many even on a lower time frame new lows. But I mean, let's say it's a movement overall downward, right, over the course of around a month, right, from September to October. That's safe, right? And ATR has reached a new low, so you would expect probably when ATR reaches a new low, then that means it's more likely to have some change in the direction, at least temporarily, and it's overall within the lower part of this range. And now we come to the time where we draw something on the chart and see whether it works. I think that is an approach which has some limitations, obviously, but it can sometimes be useful. So, I mean, if we were to say, and I would stress, like, okay, the upper part of this channel not confirmed, and the lower part definitely not confirmed. But if we were thinking in that possibility that this is going to be confirmed, well, we're in the lower part, so I mean, we'll be more inclined towards buying. Just the caveat with that, I think, is obviously that we've got all this data coming up this week. Where would you set your target? Where would I set my target if I was going to be buying? Probably around the recent high, but I think to be just a little bit maybe safer, inverted commas, probably set it around 118-ish. And let's see if we can actually get a reasonably good ratio here. I think it's important to do this kind of process, maybe not in this level of granular detail, but to do this kind of process approximately before you're actually setting up a trade, especially if you're not really too sure about it, and seeing can we actually get a reasonably good ratio. And I think we can't. I don't think we really can get a very good ratio here. Could set the stop a little bit higher than that. That's true. You could set the stop around 115.5, just being aware that it's quite likely to be triggered. We still don't have a fantastic ratio. So for me as a swing trader here, or as a position trader, I don't like this. I probably would not be wanting to trade this very soon. Whereas with intraday, around the time of the Fed, yes, of course, great opportunities potentially to trade there. Watch and see the reactions to the news. If the Fed seems to be more confident, if they seem to be more positive about the upcoming economic conditions, and especially if they kind of cast some degree of doubt on rate cuts early next year, then we can probably expect to see that going down, euro dollar, since there's still some reasonably considerable intrigue about are we going to get a cut in January. Obviously we're looking quite far ahead here to January, but still there's some intrigue about that. And so if all these factors align more or less, then we can possibly, I think, see it moving down to the 200 SMA on the hourly chart, quite possibly. Depending, of course, where is the starting point from that situation. But that depends when we actually get to the Fed and when we actually get to GDP. How is it moving around these? What is sentiment? Be aware of the scenarios and the possible targets and stops in advance, and then just go with whichever scenario is the one that's actually developing. Yeah. So, question from Jimmy Chua. How to see order flow. It's not exactly order flow, but on Exness's platform, I'm not sure where actually this has gone. You did used to be able to see it on here. Just not exactly sure where it's gone. Yeah, sorry, I'm just being really stupid, right? Sorry, you can see the percentage of traders who are buying and selling just below in the buy and the sell. I mean, I would just say, right, who asked that? Jimmy Chua. Yeah, Mr. Jimmy, that is limited for a lot of different reasons. That has strong limitations because, I mean, not to be too blunt about it, but a little bit blunt about it, what happens if all the other traders are idiots? They might all be wrong if they have a certain particular direction. That's one obvious limitation, because this is, of course, just from Exness. The percentage of buy and sell orders that are recently opened by traders at Exness, not in general, not overall. And part of the reason I think also here that this is quite limited in terms of its utility in itself is that various traders might be buying or selling over all sorts of different timeframes. In that it might be, let's say we're around the Fed, right? We're around this time tomorrow, or a few hours after this, obviously tomorrow, and Jerome Powell says, for some reason, he would not do this, but if he did, we're actually going to do a double cut in December. We're going to cut 0.5% in December, and I'm committed to doing this. This is going to pump. You would expect euro dollar is going to pump. That's a really unlikely situation, but if that did happen, it's going to pump in the short term. Just what happens later? Are all the people who are longer term selling going to close the trades around then? Probably not. No, probably not all of them. So that's one important factor, I think, as well. And I mean, this is not exactly order flow, of course, because you can't see the actual price at which people are entering. And you can't see the volume that's associated with a certain specific price. As far as I know, and I'm not an expert on this topic, I would just say, Mr. Jimmy, but as far as I know, there isn't a way of doing that on Exness's web platform that I know of, I would stress. And on MT5 you can do that, it just doesn't really work very well. So that's kind of the closest that you can get, and as I say, it has various limitations. But thanks, Mr. Jimmy, for the question, and hopefully that answers your question to some degree, and is somewhat useful. Even if you could get an actual order flow on Exness's web platform, I think that would be just one factor in among loads of other factors that you need to consider before you actually make a trade. In my view, it's very, very risky to look at one or two particular factors. When it comes to trading, you want to try to find a combination of different factors and get them to agree wherever possible, as many of them as you can. Yeah, so fingers crossed that answers your question, Mr. Jimmy, right? Next question is from UBSTube, US 30 Dow Jones. Yep, let's definitely look at that. So I mean, overall Dow Jones is pretty dominated by tech. So I mean, in keeping with the various other indices, it's been going up recently. The shares always go up and all that. It's one of the primary narratives, and it's reached a succession of new highs. And I think it's probably going to continue doing that. In that we have overall not super positive, but moderately positive outlook for earnings, as we looked at earlier. And I mean, overall, we're expecting rates to come down. Some people are expecting rates to come down quite significantly over the next several months, and into like next summer. Some expectations rates are going to come down by quite a lot, which might be possible. Of course, that situation would be positive for shares. And trade wars are they're there, they're just not particularly in focus right now. So that's why it's likely to keep going up, I think, Dow Jones. I'm just not sure that this is really a great candidate for a trade for us as traders of CFDs. And that we don't necessarily want to be sitting on this and holding it when we could be just buying an ETF on it at a better price and actually getting the dividends that way. That's not advice, that's just my personal opinion. Whereas what I think is a potentially good opportunity to trade the Dow would be if, for some reason on Friday around Donald Trump's meeting with Xi Jinping, that breaks down. They start screaming at each other, no agreement, massive escalation. Not very likely, but if that does happen, then quite good potential opportunity to be selling there. Because around Liberation Day, of course, great case study as to why CFDs are useful. Actually, you can make a reasonably big daily and weekly profit by selling if you get in at the right time. Of course, it's a fairly big if. And finding, of course, the correct entry earlier this month when we had this escalation in trade tension is also possible. I just think it's a bit of a risk. Who asked that? Tube, yes. It's just a little bit of a risk for me, definitely quite a big risk, even though we're quite obviously overbought here and we don't have much upward momentum to like set up a sell trade now and just sit on it. Don't really want to do that unless there's some kind of fundamental reason that's driving this, or I have like some kind of reasonably good idea as to where I think it's going to stop. Where am I going to set my target? Since about 45,000-ish might be a little bit too aggressive for selling. Maybe a trailing stop works better in that situation. So I just not, for me at least, not particularly in focus as a CFD, the Dow, since it's quite likely, barring some kind of unlikely escalation of trade wars or something like that, barring that, probably quite likely to keep going up. And thanks for the question, UbsTube. Hopefully that gives you some insight there. And then ASJK7RH asks, gold support zone, please. Yeah, let's look at that. We did discuss that briefly before, and I think probably one of the main long-term supports could be 100% Fibonacci retracement. So that's just around 3,500. I would just stress, obviously, for the average trader, that's really not very useful at all because it's about $400 below the current price. So not very useful. But potentially, I would be looking at about 3,800 as a possible support in the medium term-ish. There's just no really evidence yet that that is going to function as a support, because it's not been tested as support ever before. We're in quite unique territory. And of course, I think one of the possible dynamic supports is the 50 SMA from Bollinger Bands. So these are all possible candidates. I just think, like right now, as we were saying earlier when we were looking at the more of an intraday time frame, we're on the half-hour time frame here, right? 3,900 is a possible round number, and we're very, very obviously oversold. So it's quite possible, I think, to see the price bouncing at least temporarily from here and no immediate push below there. It just depends on various factors, including volumes, including to what extent is there still appetite for this among sellers, and it depends on the Fed's press conference. Depends on GDP, which is coming up this week. So I think these are all very important factors to watch. And I think, as I was saying before, I know obviously this is a bit of a Jack Bastard, excuse my language, answer. Whoever asked this, yes. This is a bit of a useless, answer. We kind of need to wait for the Fed to see any kind of new fundamental drivers, in my opinion, since there's not going to be that much institutional volume on this right now, and we're here and we're on Tuesday morning, and we've got the Fed coming up tomorrow, and then we've got GDP coming up on Thursday. So there's just not going to be that much, but it's unlikely anyway, let's say, to be that much momentum pushing like an obvious new low when we've got this coming up, based on historically how we usually expect the price to behave. So that's why I just think, although it's a bit boring, it's a bit safer, so that's kind of a plus to wait for the Fed or the GDP release before actually really doing anything here, except for very short term. And that's just my opinion. I would stress it's not a recommendation to do or not do anything, it's just my personal opinion. Yes, and Joyce says analysis on Bitcoin. We do have time for that. Let's briefly look at Bitcoin. Yeah, I think we were here, maybe it was 2-3 weeks ago, I don't remember, 2 or 3 weeks ago, we were here and we were doing the my classic approach when I'm not sure what to do, is just draw some lines on the chart and see whether they show us anything. And I think in this case they probably do. It seems to be, to me, that we're established this area around roughly 106,000 to approximately 109,000 as looks like a likely support to me. I would stress it's quite a rough area, it's quite a general area, but it looks like that's established as a support. So I think probably overall I'd be more inclined to look at buying based on fundamentals. Generally Bitcoin has some degree of correlation with major shares and indices, and questionable, but some degree also of inverse correlation with gold. Depends really on the sentiment and overall conditions in markets, though I would stress. It would probably be looking at more for Bitcoin to go up in the near future. But if we just bring this a little bit more zoomed in, we have these clumping of moving averages, both the 50 and the 100 simple moving averages, 50 SMA from bands, and pretty close to current area price hasn't obviously broken through them. So while what I was saying earlier about the Fed and GDP and waiting for these to find out what's actually happening and then taking a position, that applies very much for some other instruments. I think it also applies for Bitcoin, because Bitcoin is usually priced in dollars. So I think there's something to be said for waiting to see, okay, what's actually going to be happening here, especially now we have much greater institutional involvement in crypto compared to the years past when I first started. Many other people are thinking that way too. My inclination would just be probably more towards buying than selling for now. And also I think a good potential use case for CFDs here, because I don't think you would be wanting to be in a long-term buy trade for Bitcoin. Just my opinion, for deliverable Bitcoin from here, you probably prefer the price to be a little bit lower, but there's no reason you shouldn't buy with CFDs if you're reasonably confident. So that is possibly an option. But again, Joyce, thank you for the question, Joyce. I'd be inclined just to wait until we get some of the most important data this week out of the way and then see where we're going from there. And in the meantime, just kind of get prepared, get everything prepared, get everything together if possible for tomorrow. And thanks for the question. Forex Geeks asks, what's your take on oil with OPEC looking to presumably, yes, looking to slightly increase output while we are seeing a risk on market? Yeah, what we were saying earlier, who was asking the question, I think it was Mr. Alua who was asking about oil earlier, right? Yes. So yeah, I would reiterate, I think that it might well settle into not a sideways trend, but I don't think it's going to make any significant new highs or lows soon. Unless we get some kind of big surprise. Yes, you're right, OPEC slightly looking to increase slightly output. And yes, I mean, possibly some risk from various different things. There's always some kind of risk. I just think for the moment, probably one of the main things is trade wars, even though it's not for various other instruments. This depends to some degree on President Trump's meeting with President Xi on Friday, and what are they going to agree? How are we going to go from there? It depends on the interviews or comments from energy ministers from the relatively larger members of OPEC, and it depends on, are we actually going to be getting any of these secondary sanctions on Russian producers of oil, primarily Lukoil and Rosneft. So for the moment, I'm not really looking very closely at oil, to be honest. Thanks very much for the question, Forex Geeks. It's just not really on my list for right now. Crude oil. I want to be looking to see if we're getting any potential surprise from either the API or the IA's stock exchange, bearing in mind, of course, just one country, just the USA. These have various limitations. So I would say it's not particularly on my list. Oil, I would not expect it to be doing any very interesting movements immediately, unless we get some kind of new surprising news. And hopefully that answers your question to Forex Geeks. That is my take, yeah, even though it's not maybe a very useful take. Yeah. So I think we're just about to come to the end of the session. I would like to say thanks very much, everybody, for joining. And if you do have any more questions in the meantime, please by all means ask them. If you want to know more and find out more, you can follow Exness on YouTube. And among other things, we do a weekly video with an idea for a trade. It's not a signal, it's not a guarantee of success. It's just an idea for a trade. You can watch that weekly if you'd like. And you can also follow me on Twitter. X, formerly known as Twitter. It's at mstarkexness. And I'm sharing a few things here which you might find interesting, or maybe you might not, I don't know. But you can check it out, certainly. And various of my colleagues from the regional strategists and others, trading specialists, are also on Twitter, so you can follow some of these people from here, and you can get more diversity of opinions and insights by doing it that way. And I'm also on TradingView. If you'd like to get reasonably regular ideas, you can follow me. You can follow various other analysts and strategists from Exness on TradingView. And I would just stress that none of the things that we're posting on any of these platforms are advice or suggestions or recommendations to trade. They're just ideas for trades, and they're just our opinions. And UbsTube says, is Kojo FX going to be live this week? Yeah, I think so. I'm not sure. Sorry, I can't tell you the answer to that UbsTube for certain, but I think probably Kojo would be live. He's usually live every week. Stay tuned, and if he's live, if you've got notifications on UbsTube, you should get a notification immediately as soon as Kojo is live. Yeah. So if anybody has any more questions in the meantime, you're welcome. Please by all means ask a question. And otherwise, I think that's us. I think we've pretty much reached the end of the stream. And I would just say thanks so much, everybody, for being here. And please remember that none of the information or the opinions here is a recommendation to trade. It's not trading advice. It's not investment advice. It's not a signal. It's just my personal opinion. And you should always do your own research. And you always need to manage risk. It's very important to do that. Don't just take somebody else's opinion and follow it blindly. Very important not to do that. And thanks very much. Hopefully you'll join us again next week when my colleague Andreas will be doing the live stream, and then the week after that I'll be doing the live stream again. And thanks for joining. Yes, thanks social media. Yeah, social media says hi UbsTube. Kojo will be live next week Wednesday. Stay tuned and hit that follow button so you never miss our upcoming live streams. Yep. So next week, Issa Trader says, what was your biggest win? Yeah, well, I don't think we can do that anymore. But where are we? Oh no, that's a shame. That's a crying shame. But yeah, let's answer that quickly and then we can turn it off. My biggest win ever from a single trade, I think, was several thousand euros from a fairly long-term carry trade on Euro Lira. Can we actually find it? Because I just want to show you the chart of this so you can understand what I mean. This is obviously quite a number of years ago now. Probably need a bit bigger than that. Is that it? That's it? Is that as far back as it goes? It's not much good, is it? Yeah, on this particular time frame, obviously that looks crazy, doesn't it? But yeah, no, my biggest that I can remember anyway, offhand, biggest win on a particular trade was in 2018 when you remember. I'm not sure. Is a trader. Maybe you remember in 2018, there was all this debacle about the Turkish central bank, and President Erdogan says interest rates are inflationary, massive loss of confidence, and at the time it was like going quite crazy. Obviously, it's gone a lot more crazy since, but it was going quite crazy. And then when they brought in the new government, they said, no, interest rates are not inflationary. We're going to hike the rates to something insane. At the time, it was like 30% or something. So it's a massive carry, like enormous carry for a relatively large position against the euro particularly. So I just started this carry trade just slightly after this, and I think it was late August 2018, and held it for about 3 months. Until like sometime midway through November. Fairly large trade, and the profit was nice, but the carry was also absolutely enormous. It was just kind of a generational opportunity. I obviously can't show you my account statement if I could even find it from 2018, but as far as I remember, it was probably from one position it was a profit of about 800 or 900 euros, whereas usually per position I make a profit of maybe about 50, 60, 70ish. So that was just a great memory. We just kind of need to, I think, need to be realistic that this kind of opportunity is quite rare. You know, it doesn't come around very often at all. You know, and I've got a few examples as well. If you'd like to, you can read a few examples on Exness Insights too. I don't mean to like big up myself. I just, you know, I think we can learn from other people's massive wins. It's possible to, relatively speaking. How am I going to find that? Maybe let's search for Exness Insights swing trading, and then I'll move on. Yeah, if there's more questions, we'll answer them. Yeah, swing trading stocks. Right. Yeah. So there's a few examples who asked that. Isa Trader, yeah. There's a few examples here about of some particular ones where I think it went really amazingly well, and some examples of where it did not go very amazingly well. So you can read a little bit about this. Read a little bit about these. Yeah, AMD. Yeah, that was a good trade. Also, yeah. You can read it about and also Netflix earlier this year. That was a very nice trade too. So there's some good ones that I've made, and there's some, of course, bad ones. But the biggest one definitely is it was for the lira in 2018. Yeah, and you can read more about that. It's on insights.exness.com, and also from various other of my colleagues. You can find lots of very useful articles. I think they're very useful, talking about their experiences. You know, from Katerina, from Andreas, from Stan, from Chris, from Chanatip, Crisada, and so on. You know, all of these other people. Yeah, you can read lots of different opinions there. It's quite a useful site, I think. Yeah. Kwaku Cherema 2742 says, do you favour win rate over ratio of risk to reward? That's a fantastic question. Basically, no, is a simple answer. I definitely favour the ratio over the win rate. I would just try to find a balance between the two. Because usually my hit rate is not fantastic. In my personal trading, my hit rate is maybe about 60%. Sometimes it's lower than that, and over the course of a month it might be lower than 60%. But usually the ratio is 1 to 3 or higher for swing trading. So the win rate doesn't really matter that much in that situation. As long as I've got a reasonably good ratio to stick to it, then the win rate can't be like 10%, obviously, because I'm still going to lose money. But I would overall slightly prioritise the ratio, and but I would not ignore the win rate. I think you need to find a good balance between these two. So hopefully that answers your question, Kwaku Cherema. Whereas, if I was a scalper, I generally don't scalp, but if I was to scalp, then it would probably be more of an emphasis on the win rate, yes, because you can't use a very aggressive ratio really as a scalper. It's not possible. You kind of need to have a reasonably good win rate, otherwise you will not succeed at scalping. That's one of the reasons that I think scalping is, for the average person, it's just a lot more difficult than swing or position trading. That's just my opinion, I would stress. Yeah, so hopefully that answers your question. And thanks for the questions, everybody. Some good questions, and hopefully you got something out of it. The good thing about asking questions in a live stream is that it can be more engaging, and it can be certainly a lot more fun for me, and it can also be more fun for you, hopefully, and perhaps more informative. And hopefully you join Andreas next week. He's going to be at the same time. 9 o'clock GMT, should be 11 o'clock GMT +2. He's going to be doing another live stream, doing a similar sort of thing, and then the week after that I'll be back. And about Kojo, he should be next Wednesday. So next week on Wednesday we should have Kojo doing his live stream then. So hopefully you'll also join us for that. So thanks very much, everybody. That was great, and hopefully Andreas will see you next week. In the meantime, wish you successful and responsible trading. Please remember, not investment advice. Goodbye.